So John, I have heard about this tax credit for new employees. Could you tell me a little bit about that?
Well, yes, this is a new law that was passed in March of this year. The Congress wanted to stimulate the economy, and they wanted to especially get people back to work. And they passed what they call the HIRE Act, H-I-R-E. And what it entails is actually two parts to it. Number one, if you hire an employee and they've been unemployed for 60 days prior to the hire date, and this is going back through March of this year, and you can hire them and you will not have to pay the FICA tax on the employee. That's 6.2%. So for every $10,000 you pay the employee, you're saving $620 in taxes. And when you actually fill out your employment tax, the 941 or the 944s for annual, you're saving that amount of money and you don't have to pay into the IRS. On top of that, they have a $1,000 tax credit. So then at the end of the year, when you file your business return, you can receive up to a $1,000 tax credit. It's not a deduction, it's a straight tax credit. And tax credits are the best thing of all. Now there's, of course, like any government law, there's some special rules and guidelines you have to follow. They're pretty simple. The new employee cannot be a relative. It cannot be an owner. Well, it makes sense. You don't want to people take advantage of the tax credit. After all, it's our money, and you want it to be used for hiring on people who's unemployed. The person needs to be unemployed for 60 days, and it's not for a company to just go ahead and terminate somebody for no cause and then replace them and get the amount of credit. That's not the right thing to do, and that's not the right thing to do for the employee. But if an employee left on their own free will and you're replacing the employee, you're entitled to a credit. If an employee was fired for cause, I mean, you call them stealing, or they stopped showing up, or you had good reason to terminate the employee and you replace them, then you still qualify for a credit. So if you're not trying to finagle or try to get around the law, if you're just out hiring an employee because you need to hire an employee and you have justification for it, you're basically entitled to this tax credit. And it can add up to a couple $1,000s a year for each new employee. Now, as a small business owner, which I'm one of them, it's always good to think about, well, if I can save an extra $2,000 and it's coming in on my bottom line, and I'm not having to pay, the federal government that money, I'm all for it. It's one of these tax law changes you don't hear that much about, but it's actually a big benefit. All you need to do, though, is when you hire the employee, and even if you already hired him, you can go back and have them sign his affidavit. It's a W-11 form. And they have to verify and sign off saying they've been unemployed for 60 days prior to you hiring them. And this starts with wages that are earned in March. So you can even go back and recoup the money if you paid in already. So, I didn't know about this tax law, and you hire somebody back in March, you can go back now and even recoup the money. This is really a big benefit. And unfortunately, it didn't get enough publicity. And a lot of people are missing this opportunity. And anytime you can save a couple $1,000s, it should be big headlines. And hopefully people who listen to this and it fits their situation will take advantage of it. And if you need help, get professional help. Thanks. Thanks for the question.
Thank you.